Kunj Bansal joining in with us as well. Kunj, very good afternoon. Thank you so much for joining in with us. And Kunj, let's start with just talking and getting a sense in terms of what you're making of the market move today. Outperformance coming in from the broader markets again.
Yeah, obviously after the correction that we saw in the short term over the last few days, if we calculate in number terms in large cap, I don't think the correction was any significant in percentage terms. It was hardly 3-4% from the peak of Nifty 22,500 odd. But yes, a large and mid cap is where we had seen significant correction in index terms and more so in individual stock terms, which obviously was in line with the kind of disproportionate return also, or the outperformance that small and mid caps had given over the last quite a long number of months. So I guess it was more of a short-term kind of thing. The market has to keep giving the sense of the fact that equity is not a one-way straight asset class. It's not a fixed income kind of asset class which will keep giving you returns at all the periods of time. There are risks involved, and market has to keep giving some corrections also for the fresh set of money which is waiting on the sidelines to come in. Of course, the valuation becomes an issue. If market keeps rising one way, then we have the valuation. So for us in India, the question of valuation anyway remains a challenge. We all keep talking that the Indian markets are always expensive. So the largest growing economy in the world obviously is expected to be expensive. One can't imagine the highest growth rate economy being available at a cheaper valuation. But within that, these kind of corrections are something that is necessary to keep giving those intermittent correction of valuation. The problem that happens, especially for retail investors, is that he tends to shy away even with these corrections and builds in a mindset that maybe there'll be more correction. That is something that is always difficult to predict, given the way the macroeconomy of the country has been remaining strengthened, and with inflation coming under control, with fuel price having come down, unless all things remain in place, we could see CPI coming down further. So one has to keep that confidence and take a call.
Couldn't just wanted to understand whether in the recent correction you've been a buyer at all within small and mid caps specifically. I know you can't talk stocks, but any pockets after the recent ease off which are looking interesting and sort of coming back to the value zone?
Yeah, so to start with, as I said, obviously these corrections are the time points that give you the relative valuation correction, and as a result, relative safety to invest in terms of the combination of fundamentals and valuation. And then one has to take a call. If one is not comfortable taking a full call, one has to take a part investment call. Moving on, if I look at the numbers that are there for the previous few quarters and based on the order books that the managements have talked, and the valuation correction taken together, and juxtapose it with the fact of the overall Indian economy doing well and which areas doing well. Capital goods as a space is the one which looks like will continue to do well, given the way the order books are there, given the way the execution has been happening, and given the way selectively raw material price correction has been supportive in terms of margin improvement.
If you like this video, then like, share and subscribe to ET Now.